Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look again at the financial markets. Well guys, I have checked the different currency pairs across the board, and market just waits for the non-farm payrolls release. So on any market it's rather shallow action. Maybe on the Japanese yen it's a bit more active than on the others, but in general I do not see valuable setups on any market, on any currency pair. So it's just difficult to find something to trade prior the release of the non-farm payrolls. So that's why probably we have no choice and just to wait the numbers and what will happen next. But in general, as we have discussed in our weekly research, current action looks bullish, and in general the price action stands also bullish, because as market has started to form here the potential reversal pattern, or at least the pattern that should trigger some deeper retracement, that hasn't happened. So market even hasn't touched the monthly pivot point and accelerates right to the big monthly pivot resistance 1 that stands in this area. That's also the resistance of that extension. Also guys, interesting that if we will take a look at the great ABCD pattern that we have discussed previously and we traded, recall that. Okay, so by this level market has hit the minor 618 extension, but now it stands at the in the semi position to the 100% extension that stands around 138.25, 138.30 area. It's completing point of this ABCD. Market stands between these targets. In this circumstance, in this case, market as a rule has the tendency to complete the ABCD pattern, and we discussed that as market hasn't even show some retracement to retest these broken highs and just continue move high and erase this head and shoulders, this in general looks bullish. But on weekend we suggested that market still should show some bounce down because it's a resistance, and even minor bounce at least should happen. So that's 136.15 area, the nearest fib support on the daily time frame, right from the most recent swing up. That is also the previous top of the head and shoulders, potential head and shoulders pattern on the 4-hour time frame chart. So that's anyway, this is the previous highs on the daily time frame, and we said that, well, that will be just minor retracement. The market will retest this low, these highs, and could continue move high. But what we see right now, market doesn't move in this direction. We see this really small candle, almost we could say the inside day for that one. Currently price action is also anemic, so market doesn't want even to show the minor bounce right to this area. This could be either the bullish sign or sign of the indecision, when the market just waits something, and probably the second is more correct, well, because of the non-farm payrolls release. On the 4-hour time frame chart, if we will take a look at the picture, well, as you remember, in our weekly research we said that this is the major level to watch for as the potential retracement down, because that is the weekly pivot point that also, by the way, hasn't been tested yet. Previous swing high, that area stands very near the confidence support, but currently market probably could form something of that looks like the ABCD pattern if it really will show some retracement down, because currently price action is rather choppy, and this action really reminds the retracement. Well, probably I wouldn't speak about any pattern here, so hardly it could be called as the head and shoulders. Hardly here we could get the double repo pattern, and we definitely won't get the brand body, because if we will draw the moving average here, So you see that theoretically we have the first penetration of the 3x3 close above. Now we have the close below, but that is not the net tops of the double repo. Double repo should have approximately equal tops, or it's better when the second top is greater than the first one. But that is not the tops of the double repo. That is probably some consolidation formation, and that is not the pattern, Napoli pattern. Also, we can't speak about the bread bottom because this retracement down hasn't quite reached the significant support level of this thrust up. It hasn't reached even 3.8 of that most recent reaction. And market should reach with the bread bottom some significant level. So probably this should be a 3.8, for example, from that swing or even from that swing. Okay, so that is also not the double bread bottom buy. So here we do not have any directional pattern. One pattern that we probably could start to think about, this is ABCD as we said, and maybe that will be some kind of the, just a moment, maybe this will be some kind of the wedge pattern, falling wedge, that is also, sorry, that is also increased the bullishness of the current situation, because the fallen wedge pattern is the theoretically continuation pattern. So market could complete inside of it some retracement. On the daily time frame, this looks like the pennant, that is also bullish pattern. So let's see what will happen on the hourly time frame chart. Market, take a look, that market has completed our pattern that we have discussed. That's a bearish stop grabber, and the minimum target was this low, and market has completed by this swing. But that was just the end of this development. So previously we thought that probably market could just use this pattern as trigger move a bit lower, for instance to the weekly pivot point or to the confluence support on the forward time frame chart, but market just stopped and has finished the move just by the completing the minimum target of the stop grabber. So it's grabbed the lows right here and returns right back again. So you can see market now stands on rather tight consolidation that probably also could be treated as the potential bullish sign, since on the forward time frame chart trend has shifted bearish. Here trend was bearish for a significant period, but market just stands flat and doesn't confirm this trend shifting. So anything will depend, of course, from the numbers of the non-farm payrolls, but by taking a look at the technical picture, probably we could say that it's more bullish rather than bearish. Well, so it's difficult to decide whether to take position prior the releasing of the numbers of non-farm payrolls release, but the picture has more bullish signs rather than bearish signs. So I can't call you to take the position right here and right now, but analysis itself suggests that here we have more bullish signs. Besides, before taking position, we haven't reached yet our at minimum nearest level of support. So we said that probably we should wait at least some testing of the weekly pivot point and reaching of the nearest fib support before taking the position. And by far we haven't reached it yet. So let's see what will happen today. The situation is really interesting, and probably today we could understand whether the market will continue to move higher or not. Well, speaking about the FOMC meeting about non-farm payrolls list, we somehow forget about the gross domestic product release. That's really preliminary data for the third quarter. That will be on probably that will be released prior to the FOMC meeting, and that could be really the significant data that could make the significant add-on to the overall picture and shed some light on whether Federal Reserve will announce the tapering of the quantitative easing program or not. So the coming 2 weeks probably will be very interesting, and let's see what will happen today during the non-farm payrolls.